Hello, everybody, and welcome back to another episode of Babe, the Bitcoin and Blockchain Evolution. I'm Sarah Herring, joined by, of course, my favorite, Matt Davio. And we have a very special guest for you guys today, Tone Vays. Now, you have a very varied, I guess I will say, resume. You've done a lot of things. I love your sort of motto, Liberty Life Trail. I'm all about that Liberty train. You have a background in economics, in finance, but also, of course, you're in the world now of blockchain and Bitcoin. You have your very own podcast at Crypto Scam, and you're also on World Crypto Net. So you got a lot of stuff going on there, Tone. But for those who don't already know you, can you just talk to us a little bit about how you found yourself in this crypto space?
Sure. Thank you for the intro. That's great, actually. And glad to be on, by the way. Thank you for the invite. Yeah, so I started out actually as a teacher, and then I moved my way into finance after getting a master's degree in financial engineering. I was always like science and math inclined, so it was good. Teacher life wasn't going to do it for me. I wanted to make some money, so Wall Street was the way to go. Stuck around there for about 8 years. More than that, wait a minute, 9, almost 10. I really wanted to make it to my 10th year anniversary, but Bitcoin got in the way. But which I didn't really mind. And my first job was at Bear Stearns. That was an adventure, watching the whole collapse of the financial sector. I was fine. I was just starting out. It was no problem at all for me to transition. And
what kind of work were you doing for Bear?
we were part of Bear Asset Management, but we were building risk models. So that was the specialty that we did. Build risk models for hedge funds and other trading institutions. So I wasn't on the trade side, I was on the risk side. That's kind of been my specialty, working with data, helping build those risk models. But I got like the trading bug in early 2000s when I was first getting that job. I took a course on technical analysis, learned how to trade. And every time I would save up some money, I'd open a portfolio and I would like start trading. Which was difficult to do. You're in a job, you're like trading on your cell phone in between meetings, until eventually I quit my job in order to be a full-time trader. But there's never one reason to quit your job, right? It's like a bunch of things. When a bunch of things line up, I fell in love with Bitcoin, I would say in early 2013, after the Cyprus incident. Like, I knew about Bitcoin in 2011. I looked it up in 2012, but in 2013, when the Cyprus banks shut down and money was just confiscated by the government, I'm like, whoa, there has to be an alternative to where you can hold your money that can't be confiscated. And that led me to actually, get off my butt and go and find some Bitcoin to hold. Once I did that, everything kind of changed. I got a huge interest in it. And in early 2014, I'm like, hey, you know what? I'm listening to some of these guys like Andreas Antonopoulos and Roger Ver was very popular at the time, and a lot of other guys. And I'm like, hey, I can do this. I have experience in finance. I have experience in trading. So I started speaking at a couple of conferences, started appearing in a couple of interviews like this back then, and slowly gained popularity, did more podcasts. And that helped me quit my job. I'm like, hey, I can have this Bitcoin thing on the side. I started Liberty Life Trail as more of like a Liberty kind of blog. Hey, you quit your job, you do what you love, you travel. And that site was going to be about, eating healthy, exercising, teaching people some economics, teaching people some trading. And at the end, I just became this expert in Bitcoin trading. I guess that became my niche. And that's what most of my videos are about, helping people how to trade. And now I started teaching seminars all around the world, educating people how to trade, because a lot of people are traders in this crypto space with no experience, no traditional trading experience. And I'm coming in here with almost 15 years of trading experience now, even though I didn't actually do it for any financial institution. I did it on my own and fairly profitably. And that's kind of how I'm making my name these days, along with just educating people on what a blockchain is.
So 15 years of trading your own money kudos to you, because I've been doing it for 28 years, and I would say it's the most fun job in the world. It could also be, along with the most exhilarating, it could be very painful. So, I always like to start with, since you were a risk manager first, tell people how you kind of look at the business of trading, because it is a business, and you can't go into it ever expecting to make a number of dollars every day, every month, every week. So I'm just curious, how do you look at trading as a business?
I look at it as a very risky business. It's just as risky as opening up on brick and mortar, which I also did when I quit my job. And that probably turned out to be one of the worst decisions I've done, because I'm not very good at managing a brick and mortar. And that was a bad decision. Quitting to trade wasn't a bad decision. I was pretty good once I was able to remove all of the distractions and meetings and an actual job or a boss. Now trading is difficult for me once again, because I'm so busy being this content creator. So I've now narrowed down my trading to just a couple of trades every quarter, something very specific, something very mechanical, that takes me away from the day-to-day trading. But I always warn people how dangerous trading is. And I often get this question for people that want to attend my trading seminars where I educate people on trading. They're like, well, what's your guarantee that I'm going to make money after attending your class? And my answer to them is, you just disqualified yourself from attending. Basically, I tell them the only thing I can guarantee you is if you're expecting this guarantee, I can guarantee you will lose all of your money. I'm not here to I can't make you a profitable trader. I can just teach you the rules of what to look for. I can give you some good habits. But like I tell people, I'm teaching you how to drive a car with the basics. It's what you do after that is going to determine whether you crash and die or win the Indy 500. A lot of it is how much effort and work you want to put into it and how careful you're going to be doing it.
I definitely want to get more into some of these. This is one of the reasons I've been wanting to just pick Matt's brain all the time, being a trade veteran, and how we can apply some of the things that people have learned over the years into this crypto space. But I'm also super curious. I'm also a very big libertarian, and actually the crisis in Cyprus, the stealing of people's money, was for me like a huge shift in my fear of fiat and the banking system as a whole. And one of the things that's really interesting is I think the idea that blockchain technology can potentially put us into a space that's transparent and that is free, and that is and by free I mean that isn't obviously controlled by one country. But at the same time, I hear a lot of people talking about how this can be a one world currency, which in some ways I think is also terrifying and completely the opposite of what we're hoping for. So can you talk to me a little bit about how you see the future of this sort of revolution that's happening, and how we can keep it from being controlled by those that want to control us?
Sure. There's a lot there. So you're right. The transparency thing sounds great on the surface, but the transparency thing is a double-edged sword, right? When a lot of transparency comes in, the government also sees what you're doing. So too much transparency is not good. What I do like about Bitcoin is that I would love to one day see a government or a politician run for government that wants to put government revenue through something as transparent as a blockchain, and then we can see what they're spending. I'm a big believer that private citizens, all of their financials and all of their money should be private. It's their private property. It should be completely private. No one should know what they're doing. Now, if you are the government itself or even a government employee, then your financials should actually be public. So I would like to flip that script, and I think Bitcoin is the closest thing we have to doing that. As far as seeing Bitcoin as a one world currency, I don't see that, because we're not, the borders are not going to be eliminated anytime soon. We're still going to have countries, we're still going to have governments, we're still going to have militaries. So even if Bitcoin is always there with us, and it grows bigger and bigger and bigger, and by bigger I mean more and more popular, the governments could use it like they potentially used gold as a bit of a backing. Now, they don't have to peg their currency to Bitcoin, but the amount of Bitcoin a country has on reserve could potentially mean how financially stable that country is. Now, as far as that, after that, they can still have their own currency, and people are like, oh, these governments are going into like cryptocurrency. No, they're just eliminating cash. And governments eliminating cash is like the greatest thing ever for Bitcoin. I love it. Like, I can't wait for the governments to get rid of the $100 bills, because then everyone's going to use Bitcoin. So that's a good thing. So that's pretty much it. Now, everyone always talks about how there's better alternatives out there to Bitcoin. There aren't. I am 100% sure about that. There hasn't been a single innovation in any other altcoin that has even been considered being merged into Bitcoin. Meanwhile, all of Bitcoin's innovations keep, being exported throughout all the other alternatives. So at the end, I do believe we're only going to have one public blockchain, and that's Bitcoin. It's just like we only have one public internet today. It's just called internet. So one day it'll just be blockchain, just one. You can name your other databases something else, but they're not going to be as secure. They're not going to be as public the way intranets at big companies are. They're just little private things on their own servers. We'll have plenty of those. They're not going to be blockchains to me because they're all the resources, all the energy. Your one blockchain is way more secure instead of three blockchains splitting the amount of energy being burned in order to mine that blockchain.
Which I think it comes to a question I also did really want to ask you. Sorry, Matt, I'll let you on the next one. But in talking about some of the sort of, I guess, fixes, if you will, of what's been going on with Bitcoin itself, can you talk to our viewers a little bit about this sort of SegWit fork and how that helped and made things a little bit cheaper for some of our transactions?
Sure. I didn't make them cheaper at first because so many people were reluctant to it. So segregated witness was basically 2 years of programming innovation that took place on Bitcoin. Basically, there were some flaws in the code. The biggest flaw was this, I don't want to call it a bug. It's more like an initial oversight. And it was called transaction malleability. And without fixing this vulnerability, it was very, very difficult to build second layer scaling solutions. There's a couple of problems with having every single transaction be on the Bitcoin network, because every transaction needs to be processed by this mining system. And I'm sorry, let me back up for a minute. So Bitcoin is a decentralized way to send payments across the world. And what people need to understand about decentralization is that it's grossly technologically inefficient. The reason why it has to be decentralized is because it prevents censorship. So now let me get back to what I was saying. So because it's inefficient by design in order to be decentralized, having to process every single transaction on the protocol itself becomes very, very expensive, not only financially, but also technologically. So if you have a bunch of little transactions that don't really need this advanced processing, then they shouldn't be directly on the protocol. Like, here's an example. If you and I, had nothing to do all day, and we decided to start betting on every single coin flip that you and I do, right? So we flip a coin. If it lends heads, I have to send you $1. If it lends tails, you have to send me $1. So throughout the day, we're going to flip this coin 10,000 times. There's absolutely no reason for us to send each of these transactions over the Bitcoin protocol and have each one of them be processed, wasting electricity. We want to do this on a second layer solution. And then when we're finally done and tired of playing this game, whatever that difference is, or all of that together gets settled as one transaction. But in order to get this done, there needed to be a slight technological improvement. And that improvement was called SegWit. Now, SegWit did a lot more than that. That was just one of the things that SegWit fixed, that transaction malleability. It also restructured the way data gets stored in these 1 megabyte blocks every 10 minutes in order to fit more transactions in them. So it was a major scaling solution. Now, some people disagreed with this, and they were very adamant about it. And they decided to fork and start their own chain. And what they did was simply raise the limit. The reason why the majority of the community did not want to raise the limit is because they knew that raising the limit would have to force everyone to update their Bitcoin nodes or their Bitcoin software. And you guys, every single person knows how difficult it is to even get half the people to do something, especially update a piece of software. I mean, I'm kind of still mad that my, I have the very first iPad, and it stopped working a long time ago because like the updates killed it, right? Like I want to use this thing, but it's totally dead. And so forcing the whole world to update was not going to work. So even if the majority of the people were like majority of the smart people that were coding wanted to do a bigger block size, it was not going to work, and Bitcoin was going to split in two. So the smart people, I refer to them as smart people, but it's Bitcoin Core, which is a decentralized group of like 500 developers. They decided not to go that route, and they said, hey, we know this is not going to work, so we're not even going to try. A bunch of people didn't agree with that, and they split off into Bcash, and all they did was raise the block size. It's kind of like making the highway bigger, and it just makes no sense at all. Also, all of these Bitcoin transactions, they're priced in Bitcoin itself. So as the price of Bitcoin goes up and you have to pay a transaction fee for every single transaction, by default, your fee is going to go up. You need these second layer solutions where you can have almost infinite scalability on top of the Bitcoin protocol. So that's pretty much how I can explain it. I mean, these are very complicated topics, and I'm not even the technical expert. I'm more of the finance guy, but I try to break it down for the average listener.
Well, so here you are, a trader, and as you told us earlier, you're a technician by task. You trade technically, and you just went through a very fundamental description that just kind of blew my head. So, the technical side of things is very complicated, and Sarah and I talk about this all the time. And I think it's fascinating to me because people, I don't know about you, but I'm not nearly as involved as you are, Tone, and I've known about it probably longer than you, but I was not smart enough to buy it in 2010, let's say. So I'm not one of the smart people like you. But what I will say,
well, no, I didn't buy it till 2013. I'm in your boat too.
Even then, though, I mean, I wasn't that smart buying it, and probably until
But tell you the truth, it doesn't make you smart buying it, especially in 2010. In 2010, this was totally speculative. It was incredibly cheap. Even 2011. Right. I mean, when some people say I maxed out my credit cards, I sold everything, and I bought Bitcoin in 2011, like, you know what? You got lucky more than good, because even back in 2011, there were like serious technical issues. Like it was not ready for this. Like like very few people actually saw the future, and those people were programming Bitcoin. Like seeing Bitcoin into the future back then, I think was more luck than skill. Picking it up later, 2012 makes a lot more sense for, hey, yeah, you spotted it earlier.
I agree with you. And one thing you said earlier about, cash being eliminated, did you guys know, both Sarah and Tone, did you know that in the US, 99.3% of transactions are not done with cash anyways in our world today?
I usually say about 95, but good to know that it's even not much higher. Well, but the way I talk about it is like 95% of all money is not cash. It's all digital. You only have like 5% cash compared to digital. But yeah, it's interesting to know that like 99 and change percent are non-cash transactions.
Obviously, it's probably 95 for most retail, Tone. But I would say when you talk the large numbers of transactions that are happening, whether it's financial exchanges, bonds, real estate, obviously all those transactions aren't happening with a suitcase of cash. So that skews the number, obviously.
I mean, this goes to like way larger reaching things though too, which include like the fact that quantitative easing and many things, like we don't even actually know how many quote unquote dollars exist. Like there's so many transactions and businesses that go on in terms of like creating loans based on currencies that aren't even in that country. Like it's really the idea when people are fighting the concept of cryptocurrency is hysterical when you look at the state of like fiat currency as it is. And I definitely, yeah, cash is like kind of a joke at this point. But it's interesting because you guys both being traders and sort of dealing in, you know, commodities and I guess not sort of real money, I guess like more symbolic things periodically and recognizing different patterns and trends and these type of things. You said, Tone, that you do maybe a few trades a quarter, and actually quite a lot of the people that we've spoken to have said that they actually try not to trade all that frequently, that they make a few trades and very careful ones. So what are some of the things that you're looking at in this new space to determine, you know, what trades you make every quarter?
Well, my trades are actually not in this new space. I mean, it took me 10 years to develop these trades. And I agree with them. Like there was a couple of things that I learned, and one of them was when people told me, eventually you want to trade the least amount possible. You want to make the least amount of trades a year, and you want those trades to be perfect. And I only trade, I mean, I'm an options trader and I focus on earnings season specifically, which is why I only make 2 to 3 trades a year. They're very specific on very specific stocks that I've very familiar with after 10 to 15 years of looking at them. And I trade them with options in direction neutral ways to where I can go to sleep at night. I'm fully hedged. And basically, I'm profiting from Vega and Theta. And for the layman's audience, that's volatility and time. Those are the variables that I look for in my trades. And they're very niche. There's probably a handful of people in the world that I would even, I mean, I wouldn't show my trade to anyone because that's my competitive advantage. But if I did show it, I'd say there's probably no more than 500 people in the world that would understand even what I'm doing.
Yeah, so this, I get what you're doing very clearly, because people don't understand. Not only can you make money on markets going up and down, but you can make money in between, kind of the meat of the sandwich, of you, if you will. And that's what you're doing. You're protecting yourself with you know, outside of the value areas that you're willing to play in, and you're trying to collect that premium within that, and then you have protection if it goes above or below any range in the product you're trading, which is, by the way, one of my favorite ways to trade. So kudos to you for doing that, because it's a great way to make money.
Yeah, and I do it at the most volatile time possible. During you know, I utilize the NASDAQ on earnings.
Yeah, so you like to sell, like most good traders, you're patient for the high volatility to come in, and then you prefer to sell both, you know, puts and calls at the market, thinking that, you know, the bigger moves have probably moved at that point. So you're selling the premium to those that failed to buy it when it was cheap, which is always.
And yes, and also I do the opposite. When I'm so familiar with these stocks that I know that volatility is being undervalued in some cases, and then I go the other way. And yeah, and like you said, patience. Well, patience was actually one of my problems when I was a futures trader, and this was the one trading style that forced patience onto me, that made me a much better trader.
Well, speaking of patience, you got that HODL hat going on. So in terms of what you're doing in the crypto space and with all of these sort of new alts and things, anyone who bought Bitcoin in 2013, good job out of you. And I think HODL is a great strategy. But talk to us a little bit then about within the crypto space. Are there alts that you're excited about? Have you picked up some things where you're like, yes, you've got to get some of this and just hold it to make your crypto portfolio profitable?
There are actually no alts that I'm excited about at all. There's only a handful of alts that I don't consider scam coins. So there's a handful of alts that I consider to be honest projects. And even by saying that, I follow that up with people. That's not an endorsement as an investment. I don't see any alt doing anything. To me, 95% of alts are basically penny stocks. And yeah, maybe one will rise one day to make you some money. But I mean, if you start out as a penny stock, you're not going to become Amazon. I mean, that it's just not how it works.
Thank you
Um,
for saying that. Thank you for saying that, because that's absolutely 100%. I agree.
and the handful of alts that were like honestly created, I'll even name some. We have like Monero, you have Litecoin, maybe there's one or two more. I haven't found them yet, but just because they're there, they're decent test nets. They're doing a couple of things. They're honest projects, but I don't consider them good investments. I expect Bitcoin to fully outperform them in the long run. So look, you can trade these things. You can make more Bitcoin off of them. And it doesn't bother me at all when people are trading them and talking about trading them. What bothers me is when people try to promote an alternative to Bitcoin as a better, as just a better long-term hold, like a better future, medium of exchange. And I get bothered by that because I feel like that person is just trying to pump up his position. And in my world, I make sure that everyone knows that I'm a holder of Bitcoin. I don't actively trade Bitcoin. And even though my YouTube channel centers all around trading Bitcoin, I make it clear to people that, hey, it makes me a way more neutral and way more um, unbiased technical analyst of what's happening in the price of Bitcoin when I don't have a trade that I'm trying to talk up my trade. I'm trying to talk down the trade. I mean, it hurts me when Bitcoin price falls. I'm happy when Bitcoin price rises. But if I see in the charts that Bitcoin's going to fall, I will say it. And the moment I see any sign of a reversal in price, I will say that as well. I can change my mind easily, and I'm not married to a position. And that's one of the things that I think made me stand out amongst other people that have attempted to predict the price of Bitcoin over the years.
Let me ask you, from a trading perspective, what types of technology on the technological side or exchange side, if there were a place where you could actively trade options on Bitcoin, let's just use the one that you like, would you become more active? I would. I trade Bitcoin on the CME and the CBOE. I prefer that over any of the other exchanges just because I have a hard time understanding the safety of my money, real money in those situations. So I'm curious your thoughts on, obviously there's going to be, we've talked to people that are trying to build centralized exchanges of the decentralized tokens. What do you see out there? Could you give us some thoughts on that?
Sure. Well, there is one way to trade options, and that's through Ledger X, but you need like very high requirements. You need like over, I think like $1 or $5 million of net worth to qualify. And there are ways to do it. Now, for me personally, I would have to alter my lifestyle if I was going to trade something like Bitcoin. Like right now, 10 months out of the year, I travel. Coming up in April, for example, I'm going to teach my trading seminar on every Saturday for 5 Saturdays in 5 different cities across North America. And during the week, I'm going to be that month, I'm going to speak at about 3 or 4 conferences. And I also do videos at least once a day. So sometimes I don't even get to look at the price of Bitcoin until I'm actually live on my video. So if I was to trade Bitcoin, the first thing that's going to have to change is, well, no, people will barely know I exist, right? I wouldn't be able to have this kind of a travel schedule. I would have to literally be at home and watching the price charts and constantly trading. You really can't do both. So that's the first thing that would need to happen. And I'm not in a rush to do that. I mean, if Bitcoin is with us, it'll be more stable. I'll trade my options then. And again, my strategies are very good. I would love to get a try with the options market, but it needs to be way more mature. I mean, what I'm used to, I'm used to trading professional exchanges like Options Express and Interactive Brokers and TradeStation, and like there's nothing even close. I mean, I'm looking at these crypto exchanges, And I'm like, well, this is what E-Trade was in like 2003, 2004, right? I mean, there is the sophistication of traditional exchanges is just not there.
I'm curious, with that in mind, how do you think, I read the other day 228 hedge funds now are trading alt currencies. How are they doing that, with real money?
I don't think they are. I think those are just headlines. I think if I mean the hedge funds, most of them are pretty smart. Well, okay, so let's separate traditional hedge funds from crypto hedge funds. One of my crypto scam episodes, I believe the last one I did was about crypto hedge funds, and it was just tearing them apart. A crypto hedge fund is a couple of guys that, like, I don't know, just out of high school, are trying to convince other people to pull their money, and they're trading altcoins, right? Let's talk about the real hedge funds. If anything, they've invested into Bitcoin, and if they're smart, they're holding on to that Bitcoin in their own cold storage. They're not actively trading this stuff. There is no way they would be able to justify to their investors that some exchange got hacked or ran away with their money. It doesn't work.
I agree with you. As a former hedge fund manager, there is no way I could do this. I have not. That's why I ask these questions to a lot of people, because if I were going to start one and I go out there and look at the exchanges that are out there, there's no way I would put my money on anything right now that was significant, real money, as you said. Even $1 million, $5 million, I wouldn't place it, probably even where you're talking about. Now, when you say cold storage, now this is, again, Sarah and I were talking about this before we came on with you. Just define what that means to our listeners, cold storage. I don't really know, because I don't use these devices. I'm not in, I'm as traditional as it gets, right? So I'm curious, tell us a little bit about how you use that technology.
Sure. So I use the term cold storage a little bit loosely. There is basically, there's two types of ways to store your Bitcoin, right? One of them is you have control of the Bitcoin, or someone else has control of your Bitcoin. So let's throw that one out, right? So if you're gonna have exposure to Bitcoin, you don't want to do it with a Bitcoin bank. You don't want to put it on an exchange. You don't want to put it with Coinbase. You don't want someone else responsible for that Bitcoin. You want to be fully responsible for that Bitcoin. Now, the good news is no one can confiscate it from you. That's the good news. And in fact, my number one reason for why I believe in Bitcoin is that it's the first, and why people should, consider Bitcoin in their, as an asset class, is it's the first asset class that is just unconfiscatable by someone with a bigger gun. If you properly store your Bitcoin, no one can confiscate them from you, because no one even knows they even exist, okay? And they can't confiscate them from you. They can't even hack you if they don't know it exists there. So if you're storing the Bitcoin yourself, and now there's two ways. There's hot storage and cold storage. And the only difference is that Bitcoin permanently accessible to the internet, or is that Bitcoin offline? Okay. So for example, if your Bitcoin is on your cell phone, and your cell phone has a connection to the internet, then technically it's hot storage, because if someone can hack your cell phone through the internet, they may be able to steal your Bitcoin. Now, if your cell phone is not connected to the internet with Bitcoin on it, it kind of quasi becomes cold storage, because the only way to steal that Bitcoin now is to physically take possession of the device. You can't get to it remotely. Okay, so that's why we have these little hardware wallets, like Trezors and Ledgers, where you connect them to your computer to the internet in order to send out. But other than that, you disconnect them, and the Bitcoin just sits there on a little device like a thumb drive, or even on an old cell phone that you can let the battery die, and that becomes cold storage.
Or even on a piece of paper.
Yes.
You can just print it on out. There's so many different ways to do it. Now, I unfortunately have another podcast here in 15 minutes, so I have to get my life together, but I can't believe I haven't already seen what you're doing in terms of creating video content. I've only seen your stuff on Twitter and your website. So talk to us a little bit about where we can find you, what kind of things we're going to find when we're watching you, and so I can just snap sub right now.
Sure. So you can find me on YouTube. I make daily videos, just my name, Tone Vays. You can just Google me on YouTube. We have a morning show where we try to talk about the news and a little bit of a price outlook. I then try to bring separate shows, sometimes in the evening, sometimes standalone, that are more focused on price. And I do a lot of audience Q&A. I have multiple podcast names on the record where I interview people that I find interesting. My podcast, Crypto Scam, I haven't done it in a while. That's where I try to find another expert and we try to like critically analyze other projects. I'm pretty popular on Twitter. Again, handle Tone Vase. And check out my website, Liberty Life Trail, where I have a big section about Bitcoin education, about trading education, and my trading seminars, where it's like a one-day boot camp on how to be a technical analyst and how to become a better trader. And there is a schedule on my website, Liberty Life Trail, of what cities I'm headed to next.
I just
Awesome.
subbed from all the pages. Tone, it was so awesome to meet you. I'm super excited. I'm definitely going to be sending this out to some of my homies in the Bitcoin world to sub. And I actually already, like, basically everyone I know in crypto follows you on Twitter. So I don't know if I can really help you there, but it was so great to have you on the show. You were so informative. I hope we can get you on again at some point. And yeah, thank you so, so much.
Absolutely. Looking forward to it. Thank you.
Thanks, Tom. Appreciate your time.
No problem.